most specifically, we have to really peel back the dot plot. The dot plot is what has set the entire market aflutter. We've seen the 10-year note crash, and I believe is crashing more today. We've seen mortgage rates fall sub 7% and even fall sub 6.9. We've got a 5.99 refi streamline for FHA. We've got some news about the hub in Fresno, and there is a lot more to talk about. Folks, let's get into the news. Let's talk about the Fed and the Fed surprise, the Fed pivot. There was a lot that happened yesterday that we need to dissect. A lot of it was found in the dot plot as well as the Q&A session. So if you go back to really what happened yesterday, A, no rate increase. We got what we expected. 2, we got a kind of bland statement, and folks, after that, it is where the fireworks started. First and foremost, in the Q&A session, Powell let it be known that he thinks we are at the terminal rate. We are done. Of course, he gave himself outs. If he has to go higher, he of course will. No surprise in that. But Powell pretty clearly said, we're done. More on that in the dot plot in a minute. On top of that, there was discussion that the Fed has actually started talking about rate cuts. This is important. This is important because 12 days ago, 12, now I guess 13, he was interviewed and said, we are not even talking about rate cuts. 12 days later, Fed meeting. Yes, we have had conversations about rate cuts. That is market moving. But all the activity, all the action, all of the rate collapse is because of the dot plot. The dot plot was important. We broke this down with Anna Kelly yesterday. We had some discussion on it yesterday in the daily financial news. What did we get? The dot plot, again, just so you know, is the kind of the forward-looking indicator of what the Federal Reserve president see coming. It's 19 dots across various categories. And there was a lot in there. First and foremost, the Fed, not the market, not some talking heads on TV, the Fed saw 3 rate cuts next year. 3. Now, it ranged, I think, from 5 to 1, but the median or the average was 3 rate cuts. That is important. Why is that important? Well, up until that point, the market had priced in 4. Now, we will talk about in a minute, looks like they've priced in 6, but I digress. So again, the Fed is talking 3 rate cuts. The Fed is thinking summertime. The market will obviously try to pull them forward. Next, inflation. Actually, let's go back to rate cuts. So again, the Fed anticipates 3 rate cuts. This is important. 3 rate cuts in 2024. 4 rate cuts in 2025. And 3 rate cuts in 2026. Why is that important? Not the timing, it's the number. I believe what the Fed is telling us is 10 rate cuts, which would be 250 basis points because each cut is a quarter. 250 basis point cuts gets us to about 2% to 2.25%. That is important. We should write that down because I do not believe that the Fed will cut 3 times next year, 4 times a year after, and 3 times in 2026. They're telling you where the floor is. The floor is important. So we should be writing that down and taking that in our memory banks. Because I think what happens is the Fed will go faster or slower than their predictions. I don't think it's any secret to you and I that the Fed has been horrible with their predictions, really forever. But this Fed particular has been bad with predictions. But I think, again, they told us something that we didn't know, and that is the floor is 2 to 2.25. We're not going back to 0. We're not going back to 0 interest rates. 2 to 2.25 is the floor. Good news. So now, if you know that, what else are they telling you? Well, core inflation. Core inflation is expected to end the year, we're almost there, at 3.2%. 2024, 2.4, 2025, 2.2, 2026, 2.0. Why is that important? Remember what I shared earlier. The Fed told you the max is 10. They've just laid out the game plan for inflation. Why is that important? Because if inflation falls faster, we get more cuts. You get it? This is how you put the dominoes together. And again, let's talk about inflation, the inflation print that just came out at 3.1%. Rent, owner's equivalent rent is 31 or 32% of the calculation. Owner's equivalent rent came in at 6.5%. Does anybody in their right mind think rent is going up 6.5% today? The answer is no. No, 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 no. It is a bad 12-month lagging calculation. It is wrong, wrong, wrong. Why can I say that? Redfin. Median asking rent. This was reported yesterday by Chief Economist Daryl Fairweather. Median asking rent had the biggest drop since February 2020. Median rent is down 2.1%. Rent is even down in Manhattan 2%. So let's just do the math together. Okay, you ready? 6.5% owner's equivalent rent up times 32, let's say 30%. That gets you roughly 1.9%. So we just reported 3.1. If you subtract 1.9 from that, you get something markedly lower, certainly below 2%. If you actually add the 2% negative, like we're not talking disinflation. A negative 2% is deflation. Rent is deflating, not disinflation. Disinflation is falling, but it's still positive. Deflation is a negative number. So, according to several economists I reached out to, they expect it to really start hitting the CPI, the PCE numbers around May, June, and July. Right? So again, this is happening. It's a mathematical equation. It is horribly calculated. But if you actually calculate rent today versus this horrible calculation, I don't know what to tell you. The Fed is already at 2%. Remember what the Fed just told us in the dot plot. Their plan for inflation, let me go back there, was 2.4, 2.2, and 2.0. If inflation falls faster, it gives them room. And they just told you the max they will cut is 10. This is how we tie these things together. So now about growth. Again, the dot plot tells you they expect GDP to grow 2.6 this year, fall to 1.4 next year. So not negative. They're not forecasting a recession, but certainly below trend. And now for the last calculation, unemployment. Unemployment is expected to end the year at 3.8, certainly below 4%, and peak out at 4.1% next year. All of that has the market excited. A lot of the market, in my opinion, is looking at the inflation calculation and calling BS on the Fed's slow drop. I really think that is going on. And again, if the Fed tells us that 10 cuts is the max, and they tell us that this is the path of cuts if inflation falls at these rates, I think it is logical to assume that if inflation falls faster, you will get more rate cuts. Now the question becomes, when does the first rate cut happen? Again, the market is pricing in the following. I actually thought this was crazy. So what did the market do right after the Fed announcement? Now these may have changed this morning. This was about 4 o'clock Pacific, so 7 o'clock Eastern. 57% chance of the first cut in March. There's actually, at least as of yesterday, a 9%, 9. It's not likely, but it's not zero. A 9% chance of a Fed rate cut in January. I don't see it, but there you go. Right now, the market is pricing in 5 rate cuts. There is a 28% chance of 6 rate cuts. And there's an 11% chance of 7 rate cuts. Again, to me, this all depends on inflation. I really do think the Fed's going to get near their 2% inflation sometime in the summer, because that horrible calculation around owner's equivalent rent will actually start showing reality. And again, remember, Daryl Fairweather from Redfin says rents across the country are down 2%, not up 6.5%, as was last reported in CPI. So the dot plot was a win. 10-year note is below 4%. Last time I checked, it was at 3.97 and going lower, lower, lower. There are people calling for the 10-year note to be 3.5, others in the low 3s. Again, why is that important to you and I? Take the 10-year note, add on the margin, you get the mortgage rate. On the mortgage rate front, I put a call out 6 or 8 weeks ago, right when mortgage rates were over 8%. I said on this channel and on Twitter that I expected mortgage rates to be below 7% by December 31st. It happened yesterday. Mortgage rates came in yesterday at 6.82% and probably are going lower today. Nailed it. And boy, did the crash bros and the haters and doomers, when I made that call that rates would be below 7%, some of the nastiest things I've seen written were in the comment sections. Many of them I had to delete because they were so toxic. But here we are, folks. Rates are below 7%. We called it on this channel weeks ago. So I will take the victory lap on that one. Again, we've talked about market expectations already. Why don't we jump to the bottom? So we were lucky enough to talk with Matt the Mortgage Guy yesterday before, I want to stress this, before the Fed meeting. Matt the Mortgage Guy, thanks to UWM, has what's called an FHA or VA streamline refi option for you. You need to reach out to him. He's the mortgage guy. Go figure it out. But get this. They are offering 5.74, 5.99 streamline FHA VA refis. If you have a FHA or a VA loan and your rate's in the high 7s or heaven forbid in the 8s, reach out to Matt the Mortgage Guy, because you can get a streamline refi, which means no credit pull, no appraisal, none of this other stuff. It could be done in 10 days. Matt the Mortgage Guy, I think, is found at greatmortgagebroker.com. Again, 5.99 FHA VA streamline refis. Crazy. 5.99. Maybe lower today. I don't know. Let's talk about retail sales. So again, what did we get today? We got retail sales and the weekly unemployment claim. The weekly unemployment claim exceeded expectations, meaning less. I think it was 202,000 on an expectation of 220. So the job market is still strong. Retail sales were expected to be down, negative 0.1%. Last month was down negative 0.1%. Lo and behold, folks, consumers are still shopping till they drop. Retail sales were up 0.3%. So again, the death of the consumer has once again been exaggerated or called too soon. Rent, again, we've already talked about this. National rent is down 2% according to Redfin, not up 6.5% as was calculated in CPI. It's just a bad calculation. It's just out of date. If you take 6.5 and insert -2, we would already be at 2% inflation. It's just how the math works. I want to talk about the Hub. If you don't know, I have an office building at the Hub that is full of real estate professionals, insurance, mortgage, all of these great resources. I have a couple of spots. I would love somebody in Fresno, California to join the hub, maybe a real estate team, maybe a wholesaler, maybe a roofer, somebody who has several team members that want some office space that is a go-giver. I will give you a ridiculously low rent amount if you are a go-giver, if you strengthen the community at the hub, if you help people in Fresno, if you document your story. The hub is a building that I pay for because I'm trying to attract go-givers in Fresno, California. So I have a couple of spots open. The rent is ridiculously cheap. If you know of someone, or if you are someone with multiple team members in a company involved in the real estate space, I want to hear from you. You can leave a comment below. You can direct message me on Instagram. Again, if you or someone you know in Fresno is looking for space, or maybe has space but wants cheaper space, I want to talk to you, especially if you're a go-giver, especially if you want to join our Monday calls. I got the space. I want to keep giving back. Let me know if you know someone. I would love to speak with them. Again, we've talked about the 599. We've taken our victory lap on 7% because we were right. Folks, if you don't know, I have a channel called Best of ORAT. I need your help. I need 100 of you to subscribe. I need 1,000 subscribers, and I need 4,000 watch hours. We are just about 1,000 hours away from monetizing the channel. Folks, on the Best of ORAT, you have my boot camp videos, 2 hours each. You have an interview with Dr. Mike. There is a lot of great videos. We only post 1 video a day on Best of ORAT. It is the best video of the previous days. Do me a favor. I know. I'm asking you to take a couple of minutes of your day for me. I appreciate it. Please go to Best of ORAT and subscribe. Let's get to 1,000 subscribers. And then if you could watch one of the videos, perhaps one of the longer ones, that would be great. And I won't bring it up. Once the channel's monetized, I won't bother you with that. Folks, have an amazing day. The Fed pivot is here. Rate cuts are coming. The only question is when. Have fun. Bye.